following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Hi, folks. Basil Chapman sitting in for Steve Rhodes. Steve had to step out, and I was able to sit in for him. Otherwise, I'm normally at 11 o'clock till noon, as you know, Eastern Time. Same telephone number, 877-927-6648. Love to hear from you. Hey, what a market this is. I spent a chunk of time over the 3 days, other than cleaning up the snow. Most importantly, I was looking at parallels and non-parallels. Sounds like those, what do they call them? Non-parallels. Those little chicken cacciatore. What do they have? Those little non-parallel, they call them. Those little tiny things like little olives, but they're not olives. Little green things. So what I was looking at were the similarities and the non-similarities with the period that we're in and other periods where there've been major market tops. And one of the things that I thought was very interesting for the webinar that I'm giving this coming Thursday night, let me just see if I can get it right here. What does it say? It says right there. Free newsletter and webinar by Basil Chapman. Get a free month of the opening call and get access to Basil's subscriber only. It's a subscriber only webinar on February the 19th. The 1929 market, then and now, really it goes 28, 29 into the 29 period. Does it imply that I'm saying that we've got a major collapse, a depression coming? Not at all. I have no idea. I don't think anybody can actually, at this particular point, say, hey, depression coming. You have to go step by step. In fact, that's part of what I'll be looking at on Thursday night. I'll be sure what in fact are you looking at that tells you that this is more than a short-term or an intermediate-term sell-off, that in fact there is a secular change of trend that's going to go on for a long time and thousands of points in the Dow to the downside. Big questions, those. Most importantly, what I want is to be able to say this is such an important period, it is such an important time, that right now we're looking at the elision. You know, in Bach, you get in Bach pieces from the Baroque period, you get phrases that sometimes the phrase ends and a new phrase begins. But sometimes, especially in his fugues, you get an overlap. And sometimes it's hard to tell where an ending culminates and a beginning starts. There's an overlap, an elision. And I'm going to be looking at all those things. There's only an hour, but I mean, there's a tremendous amount that I've already done. I'm going to whittle it down. I don't want to, I will be overwhelming you because it'll be archived and you'll be able to look at it over again. But most importantly, this webinar is going to be an inflection point for me. I've waited years, decades, in fact, for this particular period. I'm going to be discussing the chapter in the book, The Psychology of Investing, that I was responsible for writing. It's a series of lectures given over a period of time that was archived and put into book form by the Harvard University Medical School, the psychology department, Mass Medical, and they put it into a book published by Wiley called The Psychology of Investing. And my chapter 11, was about the mega bull market still to come. This was written back in 1985, 86, 87, 88, and then I updated it back in the late 90s, and that was part of a lecture series that I was part of. And I'm shocked at how many of the parallels are still coexisting. So we're going to be talking about that. I'm going to be talking about how the rotation might look different at any particular time, but all the ingredients going to a pretty serious top are what we can always look for. Sudden change in interest rates, just a way overextended market, the advanced decline lines, just a whole bunch of things that are very, very important. And the timing itself for the actual, some kind of a major top, I don't know. I've got ideas, but I don't know. And will it be the major top or just a major top that says, hey, we've had a 6-year bull market, maybe it'll be a 7-year bull market. Now we need at least a 2-year timeout. What's it going to be like? I mean, those are all things that I'll be discussing. Hey, let's run the numbers. The Dow is down 24 at 17,994. The S&P is down 2 at 2,094. The comp index is, let me just move this away here. The comp index is down 1.5 at 48.92. You've got gold. Whoa, gold is taking a hit. It's down 19 at 12.07. You know, I just have not seen anything in gold. We've no gold stocks. We had a gold ETF, which we got taken out of for a very tiny loss, and now it's way lower than it was. Not way low, it's 20, 30 cents, but it was a very low priced ETF. So we're looking at silver down 90 at 16.35. Platinum's down. High-grade copper, I've been watching it real closely. There was one particular stock that over the weekend I was sent an email saying, hey, look at this stock. And it was doing beautifully, but I just didn't see that it could carry on if copper was looking weak, and it is looking weak. So you've got copper down, you've got crude oil down. Now, this is very interesting. It had a nice little pop-up the other day, and now it's giving back. It's holding the 9-period moving average. It's at 51.38. High-grade copper down 139. It's going to be very interesting. This is very important. You've got bonds, and bonds are down. Bonds are down under these conditions, and down at 145 and 7/30 seconds, down 22 and 30 seconds. The TLT is at 127.68, below the key support level. Just smashed through it today. This is telling me that I'm probably right. Let me just go on. I'll talk about what I'm probably right at. I hate to do that. I shouldn't have even said, oh, those trading gods, they're looking at me saying, wow, you were about to say, what? We're watching, we're listening. So the dollar is down 13 cents in the trading range, in this rectangular trading range, just kind of stuck there for now, digesting the huge gains. Euro is also in this digestive rectangle at the bottom phase, trying to find some kind of a base. And you've got, what am I missing? I'm missing something. Oh, the VIX. The VIX index right now is up a little bit. It's at 16.01, up $1.32. No, it's not up a little bit. It's up 9%. That's a big pop, but it's just hugging the 9-period exponential moving average area. Going to be watching it closely. For my subscribers, I started sending out charts Saturday, Sunday, Monday. Just a lot of charts, and one of the charts I sent was this a daily, weekly, monthly of the VIX index, and what it basically said is the close on Friday suggested that perhaps there is a very good chance that the INDU, now we can go to the more formal elocution discussion of the chart formations. Let me just check this 75.24, 75. Oh, that's only peak C. I thought it was a D. So that is a C right there. Is that correct? I thought in my, give me 1 second. Let's see. That's the Dow chart that I show every day. I put in a D. So I made a D right there. Why is it not showing up in the chart? Give me a second. So this high was 17,951.09. 17,975.24. 975.65. Now, why would I have differing? Did I miss something? 24. Oh, it was covered. That is C. Oh, that was silly. I said it was D. It isn't. You know, the only obligation in the Chapman wave is to count your peaks and troughs exactly right. So this is C. We're still expecting a D. Sorry, my mistake. It was a trough D in the VIX index, the 120-minute chart. I showed these the quintiles, every single day, and I discussed them. I thought that it had made a D. It wasn't a D. It was a C. There's a pullback. We should still make a D above 18,037 over the next couple of days. And if that happens, what's really important is it extends. Well, we'll see if it's today or tomorrow. But if it's today, then it extends leg B in the daily, and the S&P's in leg B in the daily, and the VIX index has had a nice pop up in leg A. Watching it closely. Now, what's really important is the short-term trading index did pop. It went to 177. No big deal. 177 doesn't give me anything, but it does say that there was some nervousness at the opening. So let me go back to what I was discussing. So the Dow daily suggests that this is called gray A, gray B. Why? Because it's underneath the 18,103 major high. And the moment it goes above that, in this particular instance, I'm going to be calling it leg C if it does. If it does it after leg B, or if it's today, it'll be leg B. I think it'll have to wait a little bit. And that says that the daily chart is still moving on, still going to higher highs. If that happens this week, it extends this leg. But if the Dow goes to 18,104, it means you've got your leg D. And let me move this away. In the Chapman wave methodology, what you look for is the lowest, most obvious low bar, and then you want to go successively higher to 4 higher peaks, and that goes to D. At D, other things can happen. But wait a minute. The big thing about this, the reason why I think February's going to see higher highs, even if they're nominal, is that we've only got leg C so far in the weekly chart. It should go to a D. I'll be right back. Basil Chapman sitting in for Steve Rhodes. Dow's down.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
42, S&P's down 366. Comp index down 5. Some digestive action needed to be taken over the period of today, maybe going into early tomorrow morning, maybe by noon. Maybe the Greek aspect is going to put a halt on any further upward movement for the week. I'm not sure, but I'm looking at the QQQ series, and one thing that's really impressive is the two gaps that were made going into Friday. Sure, you need to give something back, but what it's saying with the stochastic at 98%, think of it this way. When the stochastic, the slow stochastic, is trading at 98.26%, if it was the other way round and it was at the bottom, it would be trading at 1.8. So that is saying that the strength involved is superior. It is very, very strong. It is way stronger than if it was just hanging around the 93, 96% area. It also says that what would be the logical conclusion that at some point it's going to go from the high 90s to at least the 70s or the 60%, 50% area. But that doesn't give you time. And if you're looking at this, on the left here is the daily QQQ series trading at 106.88, only down 3 cents. Here is this cup formation breakout in the, right there, in the weekly, and it's in leg E/B. I don't have to make any decisions about whether it's B/E or why is it a slash? Because that made a D with a stochastic and MACD pulling back very sharply. Then there was a cup formation with a number of restarts, and now you've got a peak A right there, gray A. You've broken out to a new high. Does this continue? Would this be the low? In other words, is this the low right here? It seems like it is. If that's the case, this should be not just D, that should be in a peak F. This should be an A, and then that would be a B. But if I'm wrong, and this is merely just a continuation of that particular move, then the breakout here says, hey, maybe the D is still active and you really don't have an up arrow. Everything about it says that you should, but we'll find out, because if the stochastic in the daily holds in the 98 to 96 area for the entire week, going into early next week, flat at that level is really positive. That's number one. Number two is this powerful candle would normally see some kind of a doji candle and then a pullback, a doji candle and a breakout. But whatever it is, the importance of this candle is going to be known within two candles. That takes us into March. takes us all of this week and next week. So yeah, that takes us into the start of March. And what's happening is, because there's a breakout in G/C in the monthly chart with absolutely no technical breakdown, we have to consider that the Qs are in fact at 106, call it 107 just for argument's sake, trying to get really close to the all-time high. Let me show you something, of 120. Right there, 120.50, peak C minus. And that is incredible. I'd said back in March of 2000 to my subscribers and to my clients that the NASDAQ had seen at that particular point a top of major consequences, and that I never expected in my lifetime that there would be a test of the old high. I didn't think in my market lifetime, I should have said. Well, look at this. I can't believe it. We're right now at 107, what's the high? 106.90. We're just not very far from the all-time high. We've broken the key resistance of 103.60, and that's the right shoulder failure turnaround. And all I can say is this is incredible action. So as I'm putting it together, I'm suggesting that there's a really good chance that this week, or at least in February, the S&P goes higher, the Dow goes higher, the New York Stock Exchange, look at this, NYA.X, making a peak CF. There's no new high above Friday's high. But look at the nice action that you're looking at for the first time in that move from the October 98.86 low of last year, where we're at 11,017, and we're challenging yet again that entire resistance area between 11,000 and 11,110. 11,108 was the all-time high. And the monthly chart, look at this. The monthly chart is acting beautifully as of right now. I'll be back. Basil Chapman sitting in. Oh, we got market.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Down 33. S&P's down 264. And we're going to go to Mark in Denver. Mark, how are you?
Good, Basil. How are you?
Someone was just joking with me the other day, saying, "Hey, you're having weather that you usually have out in Colorado right now."
Yep. I know. It's going to be 60 in a couple more days, even though we got
60. I don't even remember what that feels like. Oh well, what can I say? So you'd like to look at the.
Yeah, you had the XLF on your report last week, and then you took it off. And I was just curious. I was looking at maybe trying to pick it up in the low 24s, like around 24.20 to 24.08-ish. Don't know if you think it's going to get there. It looks like it's it's made a B in the daily and a C in the weekly. What do you think?
So this is what we're looking at, folks. We're looking at the S&P Select Spider financial fund, and what's important about this is that it's been steadily, well, I shouldn't say steadily, it rocketed from the 2308 low to the Friday 2450 something high, 2453 high. So that doesn't sound like much, but for this for the entire financial sector to be actually doing that, it's very good action. So two things happened is, one, of course, I was traveling, so I didn't follow up Friday by saying we didn't get it, but of course we didn't get it on Thursday. We just missed it. Now, what was important is that the XLF looks to me like it's going to be moving higher, but it is very weighted down by some of the issues that are not participating all that well and some that are doing very nicely to make up for the difference. So in terms of percentages, I would say yes, it has a couple of, it has maybe 3 to 5% on the upside that I can see right now, which is fine. There's nothing wrong with that as a short-term trade. One of the things why I decided that I would not chase it is because the weekly chart suggested to me that it might not be in this move that it goes all the way to the next leg up, which no matter how I count it, it looks like there's no other way I can count it. That went to a peak, B in the weekly chart at 25.14, was a pretty severe pullback to the 22.89 level.
Was that a B or a C?
I'm sorry, what?
I thought that was a C in the weekly.
A, B. I only have two peaks, Well, starting from October, I only have a peak at...
oh, you're right. I missed one. I thought I was counting one from back in early November, and there wasn't one there.
You see yes, that's right. It looked like it was close, but it wasn't. So,
right.
Okay, so now what we're looking at, and I've got a D in the monthly, and when the monthly broke underneath the 9-period moving average last month, that was not a good sign. So the candle right as of this moment is a very good candle, considering how poorly the monthly went down on January. So now I'm looking at the weekly. I'm saying, gee, it's had a fabulous move, but it needs to continue this kind of power move. So here's my recommendation. Just at the moment, I see very little on the downside because of 24.18 being the 9-period moving average support. The MACD is very strong. Stochastics at 93%. So here's my recommendation. I probably should have done it on Friday and today just to start a position in the XLF and just treat it as some kind of a percentage play. Let it go to where it wants to go without me interfering and saying the weekly is not so great. Just let the daily do its thing because it is very strong. The other thing I was looking at is 24.20 on the 120-minute chart has been very strong resistance and now is very strong support. So here's my recommendation. I'm going to suggest you start a position. You can start it right now at 24.43. The real position, I don't actually want to see it go down below 24.35, 24.30, because if it does that, it would suggest even stronger that there's a limit to 24.60, 24.80 on the upside, and I'm not sure that I want to use money right now for just a few percentage points. That's the reason why I was a little bit hesitant, only in that, in a way, I think it's participating, but it's a real struggle. So all I'm going to say to you is, if you want to go into the XLF, I would do it right now, 24.43. I think there's going to be really good support in the high 24.30s right now. If by the end of the day, for Greece or whatever it is, there's a sudden turn down. And I don't think Greece is going to be the issue because gold is down, the GLD is down 212. That's not telling me that people are worried about using gold as a safety medium right now, as a function of the perhaps international trauma that could come about. So it says to me that probably we're going to move higher in the general stock market, that the dollar stuck in a trading range, euro stuck in a trading range right now. If something happens overnight with the Greece situation, things could change.
Okay.
The XLF, I think, is more at this particular point US-centric. I think so. So I'm thinking that it's got some safety factor, but it hasn't got... I shouldn't even say that it hasn't got momentum because the daily move it's only had 3 bars before it's broken to a new high, to leg B. This could be that there's only 2 bars and it breaks to leg C. So that would say, yes, all of a sudden you've got yourself some momentum. So I'm going to suggest start a position here. I would even say to you, if it breaks above 24.53 to start, either extend leg B or start leg C tomorrow, I would even add another small position, and that would be the trading position. That position would have a much tighter 30 cents or 35 cents stop. Why? Because if tomorrow is a breakout day for the XLF, you're probably going to see the QQQ series move higher. You're going to see a lot of things move higher. So it's really important. Start a little position and only add to it on a break above Friday's high. That's really my thinking.
Okay, and then last question. Do you see any type of a time price match? It's been 6 weeks from the high of 25.14 to the low a couple weeks ago.
Yeah, you're right. I was going to do the price time match from left side to the right side. Most importantly, if the XLF went underneath 24.18, there'd be no match whatsoever because it would likely fail way underneath the last high of 25.14. I'm really waiting for leg C because if I did it now, it's to be a little bit premature. And then the time left side time price match, I would go to the candle of I couldn't go to the candle of the second. I'd go before that. I'd use the high, 2406. I'd use the high of the 22nd or 23rd, and that takes me to where we are, and therefore, no, this is a very tough one. It seems to me that if I weighted it from the low of the 2nd of February to the high back on the 29th of December, let me just do that. I looked at it and I thought, I didn't get a feel for it right there, but now I think maybe I can do it. Let me just do that and see what I come up with. Okay, I have to extend it to the right. So here we go, space to the right. Folks, what I'm doing is, it's a very simple technique I developed many years ago of trying to find what I call the plumb line. You see, this takes me out to the 9th of March.
That's what I was thinking too.
My eye says this up move could very well all be over either the last week, next week, or the very first week of March.
Okay.
So in a way, maybe it will parallel, but I need to see a little bit of a break above the high of Friday, above 24.53. And then all of a sudden, what I'll do is I'll have this right here, and that'll give me very nice price time match. Oh, it's working already. All right, you know what I'm going to do, Mark? Let me finish this up so that I've got it all done, and I can say, I did this with Mark, and if everything works out like it should, let me make this pink, let me make this green. I'll draw in the cup formation, and we'll have it, and we'll use it as a benchmark of a possibility. I shouldn't rule it out. There's no reason why I shouldn't. Just my eyes said that maybe it's a little premature, but that's exactly what I'd be looking at. A close below 24.18, 24.10 would say, nah, you got it wrong. You're really looking at an arch formation, but a break above Friday's high, either today or tomorrow, above 24.53, and all of a sudden that pink line becomes what I call the Chapman wave trajectory line. It is the target price uptrend line, and that says that you can go to the 9th of March to try to make the high of 25.14. There you are.
Great.
Okay, now you've got it.
All right, thank you.
Good. Thank you for calling. In fact, now you got me to do that, and that's very good. I'm pleased it's done, because that actually turns the weekly chart into a far better chart, because it says if the XLF, and this is going to be very good, and I'll tell you why it's important, because if Goldman Sachs, which has a very similar chart pattern in leg B right now, is able to break above 190, let's call it 192 by Thursday, that would suggest it could retest the previous high. Then that'll help a lot in that XLF, because it's a big part of the XLF. Good. Thank you for letting me do that.
All right. Thanks for doing it.
Okay. Thanks for calling, Mark. So, folks, this is what I'm looking at here. Let me just go through this again. As I read the markets, I'm not going to talk about the intermediate term topping formation. I don't know the intermediate term topping formation. But what I am looking at here is the potential for the S&P this week to push above 2,097.03. This is the cash. Today's high is 209,647. It hasn't got far to go. It might, it's got a lot of resistance here. But most importantly, if it does that this week, it says you'd have to take the entire week, 1 week, before you can make a peak C. Whether it's next week or the week after, I won't know. And all I can say is I'm anticipating that the S&P weekly chart, because of what's happened, and I've been talking about this now for 2 months, is going to make a leg D. And if it makes a leg D, the soonest it can do that is the first week of March. Maybe Mark is right. Maybe I could get that XLF could go all the way to the 9th of March. All right. And what it says is that the Dow has to go above 18,103.40, what was it, 45? And that starts leg D. And I'm anticipating that the Dow is probably going to make, if it doesn't make a leg D this week, it'll make the following week. But the S&P and the Dow should at least be in leg D together, or the Dow is going to be in leg E, one ahead. And at that point, I'm anticipating that we get a pretty darn good sell-off. Why am I anticipating it? Because of the resistance levels, the time price matches. There are a whole bunch of things that are coming together to suggest that unless the Dow goes into the 18,500-600s and the S&P really breaks out, goes into the 21, 10, 15 area, maybe something like that. The way I'm looking at it, there's tremendous resistance. And that resistance has been a repellent zone, and I'm expecting that there will be a pullback, and that pullback could be quite severe in price and time. I don't know. I'm just guessing. And that after that is done, there's a chance that we get another move to higher highs. Hey, that's my scenario. What can I say? All right. Now, one of the things that's most upsetting to me, and it must be upsetting to subscribers, but it's not the end of the world. We didn't take a loss. But we were short the IBB via the BIS. That's 200% short. It had a fabulous profit at one point. It went from our short level, which was 39, I think 47 or something like that. It went all the way to 44.65. That's 5 points. That's huge in the 200% long. Well, we got taken out this morning for just a tiny gain, 10-cent gain. But I had typed up in my report this morning, buy the BIB, because I think that we're going to get taken out. And if we get taken out, immediately switch to the BIB. That's 200% long, the ProShares Ultra Nasdaq, and then I pulled it. I've promised myself, I don't know how many times over the years, you do the homework, don't change it at the last minute. But my thinking was that if the BIS did actually break that level, it might bounce a little bit before pulling back, and that we would have a chance tomorrow to buy the BIB. Now I think we've lost that chance. Why? We were expecting to go, I wanted to buy it, I think at 141-ish. The low today is 140 something. And I was expecting to move to 146.88. That's a nice percentage gain on a 200% long. Now it's not at 144.02, it's just 2 points or so. But what's really important about this is that the IBB, which is the root, the IBB, would make leg D above 329.20, and now everything is starting to line up.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Hi, folks. We're back. Basil Chapman sitting in for Steve Rhodes. Dow's down 41, S&P's down 4. And this is very important. For my subscribers, I said that my thinking here was that the E-minis are forming a rectangle formation, that we should have a little digestive phase today. And where we close is going to be very important. And that the parameters should be fairly narrow. So far, they're narrow, but the day is young. And we're going to be watching the VIX index. After all, look, the volatility index popped very high. It went from the low on Friday, where it closed at 14.69, to today's high of 16.33. Hey, 2-point pop up. It's up $1.25 right now. So it's holding quite nicely. We'll watch it closely. And based on the potential hazard with the Greek debacle forming, if it does, you just have to be ready. And that's the reason why I'm trying to look at these markets and start setting in place in my mind, if not in reality, which stocks have the potential to move down and perhaps ignore the general market as it stands right now. Did I get a short right there? What did I say? Just missed it. Okay, well, that's the way it goes. Okay, so the VIX index, if it starts to climb, it's a 1597. If it starts to climb above 1661, the 9-period moving average, I'd say, hey, be a little careful here. If it starts to climb to the 1750 to the 1810 level, then we could see the market pull back right into tomorrow. So I'm just saying, at this particular point, the parameters are very clear for me. On a weekly basis, the Dow doesn't have to, because it's already made, let me just do this, show it to you. The Dow's already made a peak C, and it should go to 18,104. It should just sneak above that, at least above that previous high, to start leg D. At that particular point in the Chapman wave methodology, when you get to a D, the fourth highest peak, then you can start to anticipate that other possibilities are real, that you could have a deeper pullback, you could use time for a pullback, or you could recycle higher. But D is where the fourth highest peak, that's where it's really important. But here's the issue. If you're only at peak C, and these are weekly charts, it would be so unusual to have a major pullback, and I'm not talking about a major collapse, I'm talking about a major pullback, intermediate term type pullback of more than 8%, 10%, let's say, from this peak C. That would be a little unusual. In the weekly chart, I'm suspecting that probably move this away. It's a 120-minute chart. And everything said that on Friday, because the S&P went to an all-time high, it turned the monthly into F/B, and everything about it at this particular point really looks like B. That would imply that you could not get to a D. You'd have to take the entire month of March with no new high, then a new high in April. That would go to C, and then a pullback in May. That would give you peak C, and then a leg D up in June, and that would be the earliest that you could get to D in the S&P. The New York Stock Exchange, which I spoke about just a little while ago, would say that if it broke out to a new all-time high above 11,108, and it's not very far away, that would most likely be a B. And now we've got everything lining up to say, hey, unless it's a major pullback, thousands and thousands of points in the Dow, there's a good chance that we will go higher in 2015. How does it happen? I don't know. All right, I'll be back for my show straight after this. Stay tuned. And Basil Chapman signing off just for now. I'll be back for my own show, The Tiger Technician's Hour, straight after this break.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.